and we start to see different results coming. Maybe the claim frequency settles down some. Maybe there's still the same number of claims on an annual basis, but the severity of them comes down. Insurance companies love that. And so as a result of that, you think about workers' comp claims and property loss, all those things. When claims start to come down, we start to go from having 22, 27% rate increases to maybe only 6 and 8 and 10% rate increases. So absolutely 100%, we're able to almost immediately drive rates down just by placing them with a carrier who better understands their business operation and who values their investment and our investment into loss mitigation techniques.
Welcome to Peer Talk, a dialogue with business owners just like you. Peer Talk conversations run the gamut of business challenges facing owners today. The host of Peer Talk is Dan Crowley, founder and owner of Peer Executive Groups, which provides a safe space for owners to share their experience, grow their businesses, and learn from their peers.
Hi, this is Dan Crowley. We have a number of great owners in our peer group network, just like you, and our job is to give you a voice here on Peer Talk. This podcast is sponsored by Wheel Jackets. Wheel Jackets is setting the new industry standard in surface protection by providing the strongest and most affordable line of products. Wheel Jackets are preferred by contractors to keep their equipment from marking up and spilling on finished surfaces. Wheel Jackets took advice and opinions from people in the field to design and develop a product that saves them time and money. Wheel Jackets are the trusted surface protection product by peer group members and will undoubtedly keep your job site clean from equipment markings and leaks. Today's guest is Ryan Reynolds, a seasoned entrepreneur and the owner of Grimes Insurance Agency based in Lubbock, Texas. Under Ryan's leadership, Grimes Insurance has flourished, becoming one of the largest privately held insurance agencies in the state. Celebrating its 75th anniversary this year, Grimes Insurance stands as one of the longest-standing privately held agencies in Texas. With a dedicated team of 36 full-time professionals, they serve clients across multiple states. Ryan spent 16 years in senior leadership at one of the nation's largest insurance companies before deciding to leave corporate America in search of greater control over his financial future. He successfully acquired Grimes Insurance by leveraging a real estate portfolio consisting of residential and multifamily properties. Today, Grimes Insurance continues to expand, meeting the diverse needs of clients across the country. Welcome, Ryan Reynolds. Hey, welcome to another edition of Peer Talk. I am Dan Crowley, and today we have an exciting episode about insurance risk and what it means to you as an event rental and equipment rental operator. And our specialist today, we have Ryan Reynolds from Grimes Insurance. Welcome, Ryan.
Hey, thanks, Dan. I appreciate the opportunity and grateful to see you and talk to you again.
Excellent. Well, we're excited. We have not covered this topic in 4 years of doing Peer Talk, and it's long overdue, especially as things change. What I'd love to do today in the program is kind of get to know you a little bit about your practice, but also, we'll talk about these industries and also what's on the horizon for both from a policyholder standpoint and what's been happening lately with claims activity, right? So I get a sense from doing peer groups in the agency space that change is always there and continues. And so we want to take a moment and address where we stand here in 2024. Does that sound good?
Yeah, that sounds great.
Excellent. So tell us about your background in the industry, where you came from, how did you get into insurance, and also what types of commercial businesses you have that you're working with at Grimes right now. But let's start back at the beginning. Go ahead there.
Yeah, great question. So no little boy dreams to grow up to be an insurance person, right? So there's got to be a story there. I had a mentor. I was actually in doing my undergrad. I was a pre-med student and had a mentor, thankfully, help me uncover my real passion, which was the reason I was pursuing medical school was to own medical practices. And he helped me see that there's plenty of opportunity to do just the same thing without the enormous amounts of student loans and spending 8 or 10 or 12 years in college. So he introduced me to the insurance space. While I was still in college, I took a job with State Farm, and I worked for State Farm Insurance in various capacities, from claims to I was a State Farm agent at one point, and then climbed the ranks in their executive leadership team. And I spent 16 and a half years at Grimes, or excuse me, at 16 and a half years at State Farm. And then time came where I just got tired of corporate America, and there's a long story to that, but just got tired of corporate America and wanted to put my family's financial future back in my own hands. Fortunately, while I was an employee at State Farm, I'd been building up a real estate portfolio that when Grimes Insurance came for sale and it looked like that was going to come to fruition, I was able to leverage that real estate portfolio, and I bought Grimes, which at the time, Grimes Insurance, there were about 12 employees and about 2.6 million in revenue. And it was a great opportunity to walk into as a family-owned agency for, at that point, about 70 years, 69, 70 years. And over the course of the last almost 6 years, we've more than doubled it. And still a thriving organization, and we're really close, actually, Dan. I think we'll do it next year in 2026. We'll break into the top 20 privately held insurance agencies in the state of Texas.
Wow, that's tremendous. And we're fans of Western Texas. We've got operators down in Amarillo and Lubbock and different spots. So very cool, and quite a neat area of the country. If anyone has not been up to that area of Texas, it's a lot of fun driving around the big open space, right? Very cool.
Yeah, lots of sky out here.
So you're not unfamiliar with our equipment rental clients because you do work with a number of their customers. You had shared with me previously that you work with subcontractors in some of those businesses. Why don't you tell us a little bit about those different industries that you work with?
Yeah, so we work, one kind of niche we have is with real estate investors. Now, most people, when they think of real estate investors, they think of people that buy single family homes and apartment complexes. And yes, that's true. We also work with a lot of real estate investors that own massive amounts of storage units. They own LRO buildings, big warehouses that they lease out to people, maybe like some of your clients, Dan. So lots of real estate investors. We love rooftops and we love buildings. And the reason we love them is because we get an opportunity to geek out on them, because most insurance companies hate those structures and they're really hard to place. Most insurance agencies don't really fully understand how to protect those risks and how to do it on a really affordable basis. And so that's one area we thrive in. We also are in the manufacturing space. We work with manufacturers. And we do a lot of, because Lubbock, Texas is a booming area. West Texas is booming between Amarillo and Lubbock and Midland, Odessa, and down throughout other areas of West Texas. It's growing really rapidly. And so home building and construction is a big piece. So we work with a lot of subcontractors, concrete guys, general contractors, and so on and so forth.
Got it. Well, we know obviously from a contracting standpoint, it's the bulk of our equipment and tool rental customers that we work with, and we're buying assets, rental assets to get out to the market, everything from boom lifts to earth moving equipment. And so it's just fraught with risk, right? So you buy a piece of equipment, you say, how could this piece of equipment hurt my long term of my business? So we look at what has to happen from an insurance standpoint. But tell us a little bit about how you see it when you're dealing with those commercial customers. How do you approach them? So they may come to you from another coverage perspective and just want to save money. They may just maybe not be aware of what coverages they have, and you have to become a little bit of an educator. Give us some examples of what that might look like for you as you get out there and work with those types of contractors.
Yeah, so I think the first important piece is you'll never be driving through West Texas and see an advertisement for Grimes Insurance. That's not how we operate. We are 100% referral based. So if end up sitting in front of someone, it's because one of their friends or colleagues referred them to us, and we've done business with them for quite a while. So that always helps when you're referred and you're not there. We don't cold call. We don't do any of that. And really, what we're trying to do, Dan, is solve problems. So everyone has a problem, whether it's price or coverage or frequency of claims. Um, it really boils down to whatever their problem is. So we like to sit down and just say, hey, what are the frustrations? What are the heartaches about your insurance program right now?
Mm-hmm.
Generally speaking, it always comes back to price. They'll say, well, I'm paying too much for my workers' comp or my building coverage or my business policy is just through the roof, which has happened a lot over the last couple of years. Massive rate increases. But generally, that's because there's an underlying issue. If you're having substantial rate increases, generally there's an underlying reason. And so our job is to really find out what that is. Is that a claim frequency? Meaning, can we help that with some safety protocols, putting some safety things in place? Are we hiring the wrong people to drive your vehicles around to deliver cranes and heavy equipment and those kind of things? Do they have DUIs and tickets and accidents? And so your commercial auto policy is through the roof. So
Mm-hmm.
really, that's our strategy, Dan. Is we want to find out where the pain is, and then we want to do our very best to solve that pain. And so we use a lot of different resources to be able to do that. But that's really what we're looking for. If somebody's coming just, hey, our price is high, shop this policy, we need to have a deeper conversation. What's influencing the increase of the price?
Yeah.
And once we know that, then we can really go to work and solve it. It's more rifle approach as opposed to a shotgun approach.
Got it. Okay, that makes sense. And then obviously, thinking of my customer and them listening to this podcast right now, I'm sure they want to dig into this next question. I'm curious how you perceive the cause of loss. So we know that there's theft, we know there's vandalism, we know that there's breakage and safety concerns. So it's human impact, but then there's also environmental impact, right? Climate and what's happening. Do you notice that percentage shifting the last few years, or is it 25% human error and theft and 75% catastrophic activity, or how do you see that?
Yeah, good question. I think it really depends on the proximity of where the equipment's stored, where they're
Mm,
domiciled. If they're in the Midwest, they may have different and significantly less exposure than you might in Houston, Texas, for example.
got it.
In West Texas, we see a lot of hail. Now, in the heavy equipment business, we don't see a ton of hail claims, but we do see them on the property, the premise policy, on the vehicles and things like that. Not so much on the heavy equipment side. Um, but yeah, we certainly see an uptick especially throughout West Texas and the entire state of Texas. We see a tremendous uptick in catastrophic losses.
Hmm.
Absolutely.
Okay. Interesting. And then the other part to that, when you get to obviously the catastrophic losses, we're seeing the wave effect or residual effect of what that does to carriers and carrier movement changes. We have in our industry, we have big captured insurance coverage through, like, let's say ARA insurance, and then we've got like big players like Epic and different like that. But how does that work for an agent? Like, how is an agent affected by that? Is it? I mean, is it a good thing that your agent is got options and can move, and that you're not necessarily, as a policyholder, not necessarily beholden to one carrier, or what? How's that look for a
Yeah,
customer?
so I have a bit of a unique experience with this because I was a captive agent with State Farm
Mm,
and had my own agency there, and then now as one of the largest independent agencies in the state of Texas. So unique experience there. From from the State Farm side, number one, they generally is outside of their risk tolerance to insure folks like some of your clients,
hmm
but they may take on some of the smaller shops, or maybe a contractor wants to rent a piece of equipment. They can bring that onto their policy for a short period of time, a week or a couple of days. So they have a little bit of exposure there. But the hard thing about being with a company that has very, even if they're an independent agency, but they're very limited in terms of what carriers they work with, they really have no options. When you call them and say, "Hey, my rates have gone up. What can we do about this?" Generally what they're doing is they're adjusting your coverages or your deductibles, which puts you in a worse, insurance position,
hmm
all in order to try to save you as a client. So in my opinion, not doing really what's in the best interest of the client.
Got it.
Our approach is, and one thing we pride ourselves on, and some independents do this, we want to have access to as many carriers as we possibly can, because we believe choice makes for a better product and makes for a better price ultimately for the client. And so, yeah, it makes, Dan, a tremendous impact when you're working with an agency that has a robust portfolio of products and carriers that they can work with.
hmm
Because a lot of times, like your cargo type policy is not going to be with the same carrier as your commercial vehicle policy. And so if you're working with a smaller independent agency that doesn't have 100+ carriers, they might not be able to do that. And so you're spending too much money for your insurance program, and ultimately that's driving down your uh, your net gains.
Got it. Okay. Interesting. And then, obviously, if you're dealing in that real estate investor and contractor world with some of what you're writing, imagine taking it to the next level with equipment rental. Now you've got multiple layers, right? Because they're
Uh,
buying the piece of equipment, they're renting the piece of equipment, so you need a rental contract. You then, need to be concerned about the transfer of knowledge as far as safety and use of that piece,
yep.
and they may have subcontractors, right?
Yeah.
So
Yeah.
God forbid there is a claim. Boy, you could just picture the insurance company or the legal support team for the contractor just kind of walking backwards through the layers of contractors, right? And looking at
Yeah.
that
Yeah.
possibility. What are some of the things our customers can do, like when it comes to loss? You had mentioned to me at one point about mitigation of loss and um, the possibilities of support. So you don't just necessarily work with the client, but you have partners possibly that you could call upon too.
Yeah, absolutely. So, one thing I hear a lot from folks that we go in and talk to, and they'll say, "Well, XYZ agency was in here the other day, and they brought in their risk mitigation specialist, and so they're really going to help us dive into our contracts
hmm
and put some risk mitigation procedures and protocols in place." And really, what that other agency was saying was, we bought we bought and we employ the cheapest loss mitigation specialist we could hire, or the best one that we could
Yeah,
hire.
there you
Doesn't
go.
mean they're the best one, it means they're the cheapest ones. So what we do is we partner with it, and I'll share, it's a company called Yellowbird. And
Okay.
so what we tell people is, we don't hire the best one we can afford, we hire the best ones. And so what Yellowbird does is, as we're sitting down with somebody, once they agree to hire us as their insurance company or insurance agency that represents them, then we partner with the business owner. This is an expense we bear in effort to stand behind what we're talking to them about, which is, we're going to help drive down the cost of your insurance. And so
Mm,
how we do that is we partner with Yellowbird. And Yellowbird, the best way to think about Yellowbird is, is they're the Uber Eats of the insurance and loss mitigation world. So we go out, let's say we're working with a rental, one of your rental companies, Dan, and they're having an issue with too many accidents. Their employees are delivering heavy equipment, and they're experiencing too many accidents, so their commercial auto rates are skyrocketing. Well, what we'll do is we'll go to Yellowbird, we'll put in a request for a loss mitigation specialist around and give them the parameters that we're working with. And we'll get resumes and invitations back from 10 or 20 of the very best, most highly thought of risk mitigation specialists in that specific arena. We hire them, we fly them out, they come out to the location, and they do a very thorough investigation. They're going to interview the owner. They're going to interview everybody that has anything to do with that specific piece that we're working on. Then they put recommendations together, and we go back to the owner and say, here are the recommendations that this individual put together for you. What are your thoughts? How do we want to implement this? How is this going to work? And it's a really great process. One, it's us investing, which how often does an insurance agency come to you and say, hey, we want to invest in you and help drive down the cost of your insurance. And oh, by the way, we'll foot the bill. And so this really just helps everybody become more aware of what risks and what things are happening in the business that's driving to this inflated number of accidents on their commercial auto policy, to use that example.
Mm-hmm. Mm-hmm. Okay. Interesting. So, and the other part to that, I find having peer groups and we obviously talk roundtable discussions around different claims activity and coverage and risk management and all that. But we also know that these groups are national, so they're spread out amongst 10 different states possibly. How does that factor in? Because you're in Texas, I'm gonna guess is a good place to be an insurance agent.
It is
I
a
don't
good
know
place.
that. It is a good place. Good, good. So how does that work? Like when we deal with other states, like what are some of the conversations you've had with your peers from a national standpoint? What is on the horizon for Texas that you see possibly coming and affecting those risks?
Yeah, so I think nationwide, and Texas is no different than any of the other states throughout the nation, other than that they have a significant amount of exposure relative to some of the other smaller states.
Okay.
What we're really seeing is insurance companies as a whole, they're struggling. They're struggling to make a profit, and so they can't take those profits and reinvest them back into lower rates and
Mm-hmm.
those types of things. So when this really started to take off, where we started to see significant rate increases across the industry, I guess it's been going on 2 years. Of course, every year rates are going to go up, but in the last 2 years, they've gone up significantly year over year. I think, Dan, we're in for a little bit of a ride here, maybe another 2 years, year and a half or 2 years before we start to see insurance companies be able to get their rates where we call them rate adequate, meaning they're taking in enough premium to pay out their claims and their other expenses, and they've got some to invest back into lower rates. So I feel like it's going to take another year and a half to 2 years for these
Gotcha.
carriers to get rate adequate. And so what happens then is, from a mitigation standpoint, there's very few carriers that are quote unquote open for business. They're operational, but they're not taking on new risks. So in the past, when we put a risk through, like a rental company through, legitimately there's about 25 very serious carriers out there who will entertain that risk. Now there's more, but they say they're interested, but their rates don't determine that they're serious.
Mm-hmm.
Now we're in parts of the country, Dan, where there might be 2 carriers. In Florida, for example, I'm only aware of 1. There's other states. In Texas, there's about 6, where we're used to having 25 or 30. You get more in the Midwest, and it opens up just a little bit more depending on the state. But that's really the biggest issue right now that we're facing is the number of carriers who are willing to go out and take a risk. Now, what carriers really love, they love companies who don't shop their rates too frequently. Carriers love companies who've invested back into loss mitigation programs. They love businesses that are very, very organized. They've got all their ducks in a row. Their contracts are good. They're doing things like running MVR reports on their drivers on a quarterly or semi-annual basis.
Mm,
They love companies that are being very proactive and thinking about how to keep their losses low. And when you run into a company that's doing some of those things, the insurance world really becomes your oyster.
got
We
it.
can put you in a
Okay.
lot of different places.
Interesting. Okay, good. So the messaging here, and obviously we're in an industry in the equipment and tool rental side as well as event rental where we have a real strong association, the American Rental Association, and they, uh, are constantly talking about risk management with training and obviously legally making sure you're protected as you have those layers of subcontractors that are touching that piece of equipment.
Yeah.
Um, do you find that in other industries that you're able to help people with the cost of their premiums when you see that kind of thing?
Yeah, we are. We've been really successful in helping to drive that cost down, and it really starts with a couple of things. It largely has to do with our partnership and relationship with companies like Yellowbird that I mentioned before,
Gotcha.
where we can go in and we can show the carrier that the client and us are investing in helping to drive down their not only the severity but the frequency of their claims.
Hmm.
Insurance
Hmm.
carriers love that when you can show that to them. And so and then especially when those things are taken to fruition and taken into account and start to be implemented across the business, and we start to see different results coming. Maybe the claim frequency settles down some. Maybe there's still the same number of claims on an annual basis, but the the severity of them comes down. Insurance companies love that. And so as a result of that, you think about workers' comp claims and property loss, all those things. When claims start to come down, we start to go from having 22, 27% rate increases to maybe only 6 and 8 and 10% rate increases. So absolutely 100% we're able to almost immediately drive rates down just by placing them with a carrier who better understands their business operation and who values their investment and our investment into loss mitigation techniques.
Got it. Okay. And again, we focus quite a bit on tool and equipment, but just for our brothers and sisters over on the other side of the fence in the event rental business, I'm thinking about them and especially when it relates to tents, right? So you're going to have customers, you're going to have corporate customers, institutional customers that are going to be regulars who are, purchasing your 20 by 40 tents, your big tents that are going up. So clearly, I would say risk management around that as well seems to be a big part of it. And we see that in the peer groups, they talk about, what are your standard operating procedures? How are you, training and developing your employees as it relates to risk management, that kind of thing. What So with party rental, are you seeing like first off, have you ever thought through what that might look like to write policy on a party rental business? And if so, is it going to be something where is it probably related to the human element, but possibly also damaged equipment, right? Something from that might be caused from a climate issue or something, right?
Yeah,
Storms.
absolutely.
I can't remember where I remember one concert where the stage actually was affected by a storm. I didn't know if that was in your neck of the woods or not, but
Not
I
that I
think it made
recall.
made it on YouTube quite a bit where you see part of the stage coming down on the front And again, we see that kind of activity with tents sometimes, and of course we just had a local incident in the East related to a minor league baseball park that rented a bouncy house that went,
Mhm.
sideways for them. So same types of issues for event rental. We actually have to emphasize to event rental to make sure you have proper coverage because they don't think of themselves as at risk as
Yeah.
equipment and tool, right? So
Yeah. Yeah, absolutely. Well, I think if you think about the most frequent claims that rental businesses have, it's going to
yeah,
be theft, fire, breakage, and collision.
got it.
And
Okay,
about half of those losses occur on other people's property. So you take the tent or the
gotcha.
bouncy house, they're happening on their property, and about 30%, 35% of those claims are happening actually on the business's premises. So
Hmm,
I think you really got to look at it from a multifaceted piece. So I've got a little bit of real life experience here. My daughter just turned 9, my youngest daughter, and so we rented one of these monstrosities at the lake house and in the backyard. Had water coming out of it, and it was a blow up deal. All those.
nice.
So I pay particular attention to those things, the contracts that they have me sign, all those things. So their contract was incredibly thorough, and it placed in big bold print. If these things happen, I'm liable. I'm accepting liability for them. So I had to applaud them on their contract work. It was very clear. There was multiple pages that I had to sign, but it was very clear. The other thing I thought was really interesting because so many of the losses in this sector of insurance come by theft. Um, it was really interesting. So where I had them set it up was about 65, maybe 70 miles away from where their business was. So they told me up front, they said, look, here's the fee. The daily rental fee is this. We'll be there at 6:30, 7 o'clock in the morning to set it up. And we can come by and pick it up at 6 o'clock at night. And here's the fee. But if you keep it overnight, the fee, it didn't double, Dan, it quadrupled.
Wow.
And so I got to thinking that the overnight fee was to mitigate their risk on theft and overnight vandalism, right? Everybody in our house is asleep. Somebody comes and cuts it or
Hmm.
steals the blower or does something like that. So they've mitigated their risk by exponentially increasing their fee if you want to keep it overnight. So
Gotcha.
little things like that, I think, in the rental business uh, can really go a long ways for reducing claims. And insurance is, especially in that sector and in the heavy equipment space, insurance is such a big line item on their expense on an annual basis. It will invest some money into some of those programs and drive that cost down of insurance. And so from at some point it goes from 20% of your overhead down to 12, 15% of your overhead. That's a huge win.
Hmm.
But it's really through being very meticulous about your loss mitigation program. And nobody wants to talk about that. That's not fun. That's not the sexy side of the business, but that's how you drive down the cost of doing business. And then you can offer better, more competitive rates in the market. You can um, keep more profit in your pocket. All those things, and so that's why you work with and you hire a really competent insurance professional, and not just the person that cold calls you or listed number one in the yellow pages, so to speak.
Got it. Okay, great. Hey, we're running out of time, but I do want to touch a topic, and it probably could be a whole nother episode, but just briefly, your thoughts on cyber data, AI, where are we going with regard to coverages, and why is that important for people to start considering things?
Great question. So on the cyber piece, I feel like cyber is still to this day one of the most overlooked pieces and undervalued. And cyber is relatively inexpensive compared to the other products and services that you're purchasing insurance wise. But cyber insurance, there is not a business, Dan, in America that I can think of that doesn't have a cyber risk.
Mm,
And when you have a cyber attack or a cyber issue, it's not cheap financially, but it's certainly not cheap in terms of the disruption that it causes to your business. So you really got to do something there to protect not only the disruption of your business and the loss of revenue that your business will experience because of the disruption, but also you've got to protect your brand and your reputation in the market. If you have to call somebody and or 150, 250 customers and tell them their credit card numbers got stolen, they might be looking somewhere else to do business the next time.
Yeah.
So it really is an incredibly undervalued, overlooked aspect to your insurance portfolio program, and I
Okay.
would highly encourage you to look at it.
Very cool. Yeah, I think we're going to continue and possibly do a webinar on that coming up. So appreciate the comments on that. Well, we appreciate you being on today. With regard to Grimes, are you specifically focused in the Texas market, or do you work in states as well?
Yeah, we work in several other states. Essentially, the way we look at that, Dan, is when we're working with a client that it makes sense for us to go to another state, we go to another state. We can be
Gotcha.
licensed in another state in about 30 minutes. Our carriers, most all of our carriers, translate to other markets. So we're in about 12 or 13 different states right now that we
Excellent.
heavily work in. Texas, obviously, being our primary state.
Hmm.
But we work with quite a few other businesses in other states.
Very cool. Very cool. Well, we appreciate your time, Ryan. And again, everybody, Ryan Reynolds. Any last comments, words?
No, thanks, Dan. I appreciate the opportunity. It's always good to sit down and visit with you. So thank you, and thank you, Dan, for the impact that you've had on my business. I've been working with you in peer groups for the last several years, and you've been really instrumental in helping us. So thank you very much for everything that you've done for us.
No problem. We appreciate it. And again, I think our whole mantra of shared experience brings individual success is playing out in these peer groups. So we're really excited about what's happening with the insurance agents around the country. But appreciate it. And join us again for another episode of Peer Talk.
You've been listening to Peer Talk from Peer Executive Groups, produced and directed by Noah Crowley and hosted by Dan Crowley. Subscribe to this podcast for notifications of future episodes of Peer Talk.